Welcome back to Morning Markets. Today we're going to have a look at the first quarter of the year and what it meant for markets. The first quarter of 2025 was really marked by a period of increased volatility across markets, and this was really driven by an increase in geopolitical tensions around shift in trade policies and evidence of a cooling in economic demand. If we look across the market, we saw divergence between the performance in the equity markets, but we saw positive returns coming through from fixed income, so from bonds, but also from gold, supportive of multi-asset portfolios. If we look at the equity market, global equities in sterling terms fell by 4.2% in the 3-month period. The US stock market was really at the front of all of this. This was one of the worst performing markets across the quarter, falling around 7.2% in sterling terms. Within that composition, technology and communication services were really at the heart of some of the challenges which we saw there. If we look outside of the US market, we saw a much better breadth in terms of the returns which were coming through. If we take a basket of international stocks and we take out the US component, that basket actually outperformed the US by around 13.5%. So you saw much better returns outside of the US within your diversified portfolios. Part of this was driven by the strength which we saw in Europe as Germany unveiled plans to increase their government spending, and within China it was more specifically around investment in artificial intelligence. So two positive developments within the European and the emerging market bloc, which led to outperformance relative to the US market, providing some offset to some of those challenges which were faced. The bond market provided positive returns for a multi-asset portfolio, so some support there. If we look at US government bond yields, take a 10-year US Treasury, we saw the yield on that instrument fall by around 0.4%. So we had a positive return out of the US Treasury market, and we saw similar trends across the European bond market as well. So bonds providing some support for a multi-asset portfolio when we did have challenges in the US equity space. Also providing support, true potential portfolios aren't just around equities and also bonds. We also have commodities within there, and we saw some real strength come through in terms of the gold price. Gold as an asset was up around 17% in that first quarter of the year, and this was really driven by increased demand for that asset, given concerns around political tensions, given signs of a slowdown in the economy. So positive returns were found in certain pockets of the market, and diversified portfolios, particularly those which were multi-asset, were more supportive than pure US equity models there. We also saw the dollar, which weakened through the course of the month, just given the moderation in terms of bond yield across all maturities in the curve there. So a more challenging first quarter for the year, a bit more volatility associated within there, but there were positive returns to be found within diversified models. Thank you for watching. We look forward to bringing you up to date tomorrow here on Morning Markets.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.